This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as always, is Rob Reinhold.
I feel like we start these podcasts out the exact same way. We both say the same thing. So I'm going to say something a little different this time. Hey, everybody. I'm Rob. That's it.
Works for me. And we are in episode 18. You've seen the title already, and you might have recognized this topic from my channel because I have already done an entire video on experience and why it matters, why you are probably not going anywhere of any significance until you actually get some real experience under your belt. If you do everything right, it should just get better and better for you. But Rob has a lot to add here too. So what I would encourage you to do is to listen to this episode. Go back and watch my experience video because this is mostly going to be Rob driven. I'm going to let him kind of add his unique perspective into things, and then I'll just jump in where I can. So Rob, go ahead and take it away.
Well, thanks, Patrick. I'm a big believer in setting expectations that are reasonable. When people have these expectations, then all of a sudden the framework works very well. I wish I had someone sit down for me when I first started and said, hey, Rob, the first 6 of your trading life is going to be like this. By the end of that 6 months, you should know A, B, C, D, E, and F. And then the next 6 months, you should be doing this, and then this, and then this, and then this. That's really what I wanted this episode to be about, is about getting to the point where you actually are an experienced trader. And not just an experienced trader, but a profitable experienced trader, because we've all met experienced traders who aren't profitable. I wanted to take this episode and basically talk about all the steps of getting to the point where you are a old trader. There's a very famous saying in trading that there's old traders and there's bold traders, but there's no such thing as an old, bold trader. And you can tell why, because they just don't end up making it at the end. So I wanted to just spend a little bit of time and give you some expectations of where you should be along your pathway. And for some of you who maybe you started 5 years ago, you may have skipped over some of these steps, and you're going to want to go back and really focus on those to make sure that they are correct. With that being said, I fully understand that every single person is completely different. You all have different amounts of time that you can spend on this. We all have different stresses in our life with jobs and relationships and all this. I get that. So I'm going to be giving kind of just frameworks of like this, what you should do. I will be using the terms like the first 6 months. I don't want anyone on 6 months and 1 day to look at their life and be like, oh my gosh, I'm not where Rob said I should be. I'm a loser. That's not how this works. In our last episode, we talk about focusing on steps, just step after step after step. So let's talk about these expectations of where you should be. The first 6 months of trading is what I call the X's and O's of trading, where you've got to learn the basics. Huge focus here is on technical analysis on the charts. That's going to be the majority of what you do. You're going to be learning some basic risk management and position management. You're going to learn stop orders, what percentage of loss is acceptable, and you're going to be building this trading plan in this system with doing some back testing. All right, now past that, you really can't do much. Remember how we all had to go through math in high school, and they started you off with addition and subtraction. Now, if they started you off in 3rd grade with pre-calculus, you wouldn't have made it. It would have made no sense. You have to build on these things. And yes, I know that we all want to be maybe complex derivative traders that sell a lot of theta, whatever. You may not even know what that means at the moment. But you can't do that until you go through the steps. So the first little bit of time is going to be totally dedicated to mostly technical analysis, some basics. Once you get past that and you've built this system, you've got a trading plan, you've built your system, you've back tested it. Now it's time to go out and do it in real life, where you're going to be demo trading. We have a whole episode on demo trading. We talk about when do you start with live capital. Now, I was a little bit faster than Patrick as far as my advice on going live. My big point was until there's money on the line, you don't really know how you are going to work your system. It's the old Mike Tyson's quote, everyone's got a plan until they get punched in the face. So with live money, you get punched in the face. That is just step 2. So you've gone through, you've read a bunch of books, you've gone and watched a whole bunch of videos, you've put together a system you think is going to work, it back tested well, and then you go out in real time and you get punched in the face. Now look, a lot of people, myself included, didn't think I was going to get punched in the face. Patrick, did you think you were going to get punched in the face the first year or two?
Not at all. No, I thought I had the magic indicator, and all I had to do was follow it, and it was going to lead me to riches. That's what I did. I got nothing but punched in the face over and over.
We all do. So we all get punched in the face. Now that's typically within the first year. You've gone through, you learned all the stuff, you built your system, you back tested it, you went out there, you tried it out, and boom, you get punched in the face. Now every single person who trades had the expectation at one point they were never going to get punched in the face. We have a saying at Maverick, traders aren't born, traders are forged. When you forge something, it goes through heat, pressure, it gets hammered over and over and over again until that metal comes out harder than it was before. This is exactly this process. To go into this career with this understanding of the process you have to go to is going to be much healthier than when I started off thinking I was going to never get punched. Just bob and weave, never get punched. Having that expectation really sets you up to be able to handle those punches a lot better. So that after that first year, again, not specifically a year, but that first period of time, once you go out into the market with your system and it punches you in the face a little bit, this is really what the second year is all about. The second year is all about you've learned enough. You don't really need to learn any more as far as the book learning. Now it's all about trader psychology. And this is where this podcast comes in. This is where all the books and all the information out there about trader psychology comes in. Your job is to fix your mistakes. Now look, it doesn't work that you say, I'm going to fix my mistakes, and then they're fixed. This is how it works. And I tell this to all of our traders that I work with. I went from making a mistake a day, and I worked and worked and worked hard on it, to making a mistake a week. Now look, it was the same mistake, but I only made it once a week. And then you work and you work and you work at it, and you'll get to the point where you're only making that same mistake once a month. And then you work and you work, and when you make that mistake, you are just beating yourself up. You can't believe you're still so stupid. And then you'll make that mistake once a quarter, and then once a year. That is the process. So that second year is all about fixing you. That is your focus. That's where you need to focus. You learn the X's and O's, you went out full of confidence, the market punched you a couple times and said, hey, you need work. The second year is all about fixing you. Look, you're going to be learning about trading. You may be learning some more advanced risk and position management. This is where I know in my FX trading, I really love to do pyramiding. Pyramiding is where I add on to winning positions. Or I take positions with a smaller position than I usually do. I take a third of a position with a much wider stop, and then I leg into it as the trade starts to work my way. And if it doesn't work my way, I just cut, and I've got a third position as a loss. These are the things you can start to learn around that time. And it's really because you're trying to figure out psychologically how you can fix some of your mistakes. Patrick, do you remember this period of time where you got punched in the face and then you really had to do a deep dive into your system and you personally?
I do, and it took me much longer because I had studied one way for a while, and then it just wasn't for me. It was a system that confused me. There were a lot of exceptions that it didn't seem like anybody was really talking about, and it wasn't a system that I could test, which was a big problem for me. I have to do the testing and see, what's optimal or what's close to optimal before I even get started. So my learning curve, and I've said this on my own channel, was a lot longer than most people's are probably going to be, because we're giving you the blueprint. You give your traders the blueprint for the way you guys want to trade. I've done the same on my channel. So this should be really easy. And I like what you said, because I didn't go over this in my own video. But okay, after the first year, where should I be? What should I have accomplished? And not a goal. Remember last episode, we're not talking about, how profitable should you be. That's a goal. We're avoiding that. We're talking about the process itself. Where should I be in this process? What should I have already accomplished, and what is still yet to go? And then in year 2, what should I be focusing on? Because to me, after year 2, let's take it back to no-nonsense Forex, as far as journaling goes, We always said that that comments column was the most important because that's where you write down you making a mistake, and your mistake was the reason that this trade did not go your way. By that year 2, you should be seeing a lot less of those comments on your spreadsheet, and then progressively less and less as you go forward, because it's not the goal you're seeking. It's getting better at the system itself. And I think that's part of what Rob's alluding to as well.
Probably one of the most common people that comes aboard Maverick is the person right there in the second year. And they're at the point where they know enough stuff. They've built their plan system, but the problem is they still blow 1 out of 10 trades. And they can't seem to figure out, how can I not do it? And that's where we come in and we really take over, say, hey, let's really work on some ways psychologically with some systems to get to the point that you can remove that mistake. And Patrick, I remember in a previous episode, you talked about if you could go back in your journal and take out the trades that you were an idiot on, run your numbers. It's amazing.
No, and 1 out of 10 is way too high. You can't be taking an extra 10% of losses on your trades because of you. That completely screws up your bottom line permanently. Yes, no, you're right. That year 2 person is the most dangerous trader out there to themselves, because they feel like they know quite a bit and they got a year's experience under their belt to show for it. But man, they have such a long way to go, and they haven't done any of that stuff yet.
And one of the fallacies that a lot of people have at that point is that they just need to learn more about technical analysis. They just need to find that indicator. They just need to find that oscillator. They just need to find that thing. And they're not even looking in the right place. To me, the second year is all about trading psychology. And actually, I think trading psychology is from the second year all the way to the 5th year. By the 5th year, you really shouldn't be making psychological mistakes, especially not all that often. As you can see, I have nothing here about learning more about charting. I have nothing here about all this other stuff. This is where the game is won and lost, in the trading psychology. So if you are in that first year, dive into the charts, the technicals, read on as much as you can possibly do, play around with different indicators and oscillators. If you're in year 2, I highly recommend that you just focus on eliminating your trading mistakes. And that should be your laser focus there. As you're working on these mistakes, somewhere in year 3 and 4 and 5, this is where I think you can start to really branch out. And this is where it gets really exciting. In one of our episodes, we talked about trading multiple asset classes, trading stocks, bonds, futures, whatever it is, to where you're trading different products and you're trading different time frames. At this point, I've got a ton of accounts, and some of these accounts, my trades last 6 months to a year. Some of these are investments that I never even touch or look at. Everything is going on where I have these trading plans say, okay, this one is for ETFs. This one is for this. That 3rd to 5th year is a great time for you to branch out into other asset classes. What do you think about that, Patrick?
I think it's good. I think you could probably do it a little bit sooner if you wanted to, because I agree with what you're saying. That whole playing around with all the technical analysis tools, the brunt of that needs to happen in those first couple years. So as a lot of you know, I have every Wednesday we profile a brand new indicator that a lot of people haven't seen before. Those videos are mostly for traders in their first couple years. People beyond that should have a pretty good system in place already. And if they want to improve it down the line, they can put those indicators in their back pocket and use it for another day. But that's typically what those are for. So yeah, after that, it's more about the psychology end of it. And if you want to start adding on other pieces, that shouldn't be really difficult. The learning curve should be very, very small there, because you should already by that point know exactly what to do. So yeah, Rob, I say it all the time on the channel. I'm a huge advocate of, once you get the Forex part down, start trading other markets too. Your career path, you might end up being a great indices trader. You might end up making videos on trading Microsoft, and getting them alone and nothing else, and just getting the most bang for your buck out of that. You don't know where your specialty is going to be, and you're not going to know for a while. At least allow yourself the chance to find out, what you are the best at, because you might not be the best at everything. So that's not a great strategy in the end. So yes, definitely do it. In terms of when, I would probably go a little bit earlier than you, just so you can start putting those systems in place too, get your experience under your belt there. And then from that point on, you can focus on trading psychology and fixing mistakes with everything you're doing.
Patrick, I think we agree on this. My big concern is that the people that think that they just need that one more indicator, or they just need to learn a little bit more to turn profitable, that is the danger in that place, to where they're not looking at the hard decision, which is trade psychology and figuring out why you're an idiot. They're looking to fix it without actually fixing the root cause. So that's my big concern, that someone in that second year will look at these other things and say, oh, that will fix my trade journal. That will fix my trade numbers, when they really just need to be focused on psychology. I think you should focus on the psychology. Get to the point where you're not making mistakes. And then everything else is fun. You get to learn a whole bunch of cool stuff. It's awesome.
I agree. I think people at this point, maybe they get frustrated because they are not as far as they think they're going to get. Now that goes back to setting, unrealistic goals. That's probably on you. But yeah, it's not, you've already tested your system and you know it does really well. So it's not your system's fault. You're not, like Rob said, you're not just missing that one indicator that's going to change your life. You've already been through all that. You've already tested a bunch and you've come up with the system that serves you the best. Your next 3 to 4 years needs to be on making sure you're adhering to that system as best as you possibly can. Of course, if you want to mess around and try to improve it along the way and do all the back work that you did before, of course, you should do that. I do that. But that should not be the primary focus. That should be completely in the background. Like Rob said, you've already done that work. All right, you've already learned how to trade a system without tripping over yourself and making really stupid mistakes. Now it's time to hone things down and get rid of that 10, maybe higher % of the time where you're taking losses because of something you and your brain did, not your system, yourself. That is really where the game's won. Nobody ever tells you this. That's why so many people end up putting in all this work and end up going nowhere.
In the first of this video, I talked about these time frames being arbitrary. 6 months, 1 year, 2 years. Really, you want to be able to do a checklist of mastery. So let's say that a year and a half into it, you don't have any compulsion at all to ever deviate from your system. You're done. You got it. Rob said 5 years. Well, look, if you got it at a year and a half, you got it. It's really to the point where you're proficient at it, to where you're no longer making those mistakes. Now, I'm going to stop right here because I know there's going to be some people listening to this that are past this 5-year period, and they, as of today, have not been able to fix their problems. And all of a sudden, now that is an issue. It's not even about time. You've had plenty of time. You just haven't been able to do it. Now, look, in this podcast, we've given you lots of new things, and hopefully it's helped you. But at some point, it is no longer a good idea. After 5 years, if you haven't been able to be profitable after 5 years, I would highly recommend to not put any more money into this business until you figure it out. And I've known traders who have got to this point and they have hired psychiatrists. They have been very diligent because they wanted it so bad. I think if after 5 years, you're still making the same mistakes you were making the first year or two, I think it's time to quit and really reevaluate. Number one, can you do this? Number two, how are you going to fix this? And number three, what does your future look like?
And traders, that's actually going to be a future episode, when to quit, because there might be a time for that. No matter what you do, sometimes this industry just has a habit of chewing people up and spitting them out. The fail rate is extraordinarily high. All we can really do at the end of the day is put ourselves in the best position to win, and that's what we're focusing on here.
I know everybody wants to be a trader, wants to be successful at this, but in the reality of life, sometimes you're just not a great golf player. But listen, you can be a great tennis player. You can be a great pianist. You can do whatever you want. There are some things out there that you could go try. Trading may not be your thing, but how about real estate investing? How about owning a business and starting a business?
But there might come a time. So just know that 5 years in, if you're not making any mistakes, and you're following your system really well, then maybe the best move is to keep going. But you have to be honest with yourself here. And it might take you taking a few very large steps back to your second or third year and starting over. You're really not going to want to do that. You're going to really feel like you sunk a lot of time into this, and nobody wants to go back a few grades in school. But that might be your only move here.
For sure, that may be necessary, and we'll talk about this in a future episode. I don't want to give a big rosy thing that after this magical 5 years, that time period is totally made up. It's illusionary. Whenever it is, you get to the point where you no longer want to screw it up. You have no compulsion to screw it up. You're trading multiple asset classes. You're growing your net worth. One of my favorite things to do every single year is at the end of the year to put down my net worth statement and to see how much I've grown this asset and this asset. I love that. I absolutely love that. From that point on, it's just a matter of growing your net worth. And it becomes much bigger than trading Forex. We all started with one thing. Oh, I'm going to trade Forex. I'm going to trade stocks. I'm going to do this. I'm going to get into real estate. And at a certain point, you're going to have a lot of assets that you've built up. And all of a sudden, it's now just about managing your, I'm going to say, empire. Now, look, we might all have a little smaller empire than others, but this is your empire. And now it's about continually learning about new things in the world of trading. I got into trading in 1996. Let me tell you how different everything is today. Back in 1996, you had to go into an office with the T1 line. You couldn't trade off your phone. You couldn't trade from your house. The markets were completely different. They moved differently. They moved in a much more bottom-down way where individual stocks would move. Today, it's all done by indices and algorithms. They all move together. Everything's interconnected. So you have to continue to stay up to date. Programming just wasn't a thing when I started. Now it's a big thing. I've had to put in some time and effort to stay up to date with these markets. So it's always a process. Last episode, we always talked that every day you get up, put in the work, and that work should be learning new things along the way. What do you think about that, Patrick? How have you seen the markets change since you started?
Jesus, where do I start? My God. There's completely different drivers nowadays, for one. Your volume tends to be there when it's there and then totally not be there when it's not and remain that way for a very long time, which can drive trend traders crazy. But it's good, though. You need to have the amount of time under your belt to go through markets like this so you know exactly what to do. And, the only constant thing in this world is change. And if you're not able to adapt to that change, then what good are you? And if you haven't seen that change before and you don't know what to do, then how can you really expect to adapt to it the right way? So, the more time you put in this market, the better. I think really the most dangerous thing you can do is jump ahead too quick. I've told this story before. I see people on my comment section say, oh, I've been following your system 8 months and I just went and joined a prop firm. Or, I've been following your channel for 2 years and I just ended up landing this big account. I'm going to trade this guy's money. I'm like, ooh, really feel for that guy who just gave you his money. So I'm always cordial about it. I go and I say congratulations, because at this point, it's they're just going to have to learn the hard way. You need to have that experience under your belt. Just start looking at experience as a positive thing and not a negative thing. Don't be in such a hurry. I didn't really hit my stride all the way until about really year 7, I think. Now, keep in mind, I was building a system from scratch. That did take a lot of time. But looking back, now that time's passed, I wouldn't have it any other way. I'm glad I got to put in 7 years before I really, got to where I wanted to be. Don't let all the imagery of people on YouTube and Twitter and TikTok and stuff like that get to you. Anybody who's successful that quick is going to flame out eventually anyway. That's not us. That's not what we're looking to achieve here. We've told you to embrace a lot of things. Embrace the suckiness, embrace the process, and embrace the fact that this is going to take a long time before you're ever going to be consistently good. But if you're patient and you follow your system and you focus on that, this is going to be your best way to get there.
In the last episode, we talked about enjoying the process. It is so fun to look back. And it's funny. And I know, Patrick, you've said this, I've said this to traders. you're going to look back at where you are today, a couple years later, and laugh at how big of an idiot you are, even though you think you're smart today. And guess what? You are smart today, but you're not going to be as smart as you're going to be in 3 years, because that trader is going to be working their butt off every single day to be getting better. You will not believe where you are. And then guess what? You're not there yet, because 3 years after that point, that trader's going to look back at where you were at that point and laugh and say, oh my gosh, that was just part of the process. Enjoy the process. Imagine, and I'll give myself as a blueprint to follow. I started doing this when I was 21. I have put in 8 to 10 hours a day. Now look, not every day, but for most days, I put in 8 to 10 hours a day. And I've now been doing this for 27 years. I'm just about to turn 49. It's awesome. It's awesome. I want you to just think back of where you were last year. That's just 1 year. Can you imagine doing this for 26 more and working as hard as you're working now? Just enjoy the process. Every year it gets better. Every year you're a little bit less of an idiot. Every year you got a little bit more money. And eventually you're going to get to the point where you've put in enough work to where your experience just takes over. And it's awesome because it's not just about trading. It takes over every aspect of your life. You just get much more comfortable. You're much less stressed. You're looking at things in a much longer term way. That's the way to really grow wealth. So that's going to be your main focus, is building that net worth every single year. But it starts off with the step you're going to take tomorrow. Focus on that step. The rest will come, I promise.
Yeah, Rob, I could not have summed that up better myself, and I think that's a really good place to leave it. So for VP and for Rob Reinhold, thank you for joining us on the Trading Psychology Podcast, episode 18. We will see you next week.
Step by step by step, everyone. Just take the next step. Focus on that. Make that the best step you've ever taken. I promise you, you do that for 30 years, you're going to be so happy at the end. Goodbye, everybody.